Hello and welcome to episode number 37 of Zach's Tech Talk Tuesday. My name is Ryan McQueenie, and on this week's show, we will be looking at the brand new earnings report from Netflix and doing a brief preview of the upcoming reports from the rest of the FANG stocks. First up, I want to mention that throughout this episode, you're going to hear references to the Zach's non-financial metrics consensus estimate file. I just call them NFM estimates for short. We've used them on the show before, but for those of you who don't know, the Zach's Consensus NFM file contains detailed estimate data for business segment metrics and non-financial metrics reported by companies. The data is actually acquired from digest and contributing broker models and includes the independent research of stock market analysts. This is going to help us break down estimates further to look at line items like subscriber growth for Netflix or web services revenue for Amazon. When we prepare for earnings reports, we tend to focus in on final numbers like earnings per share and revenue estimates, but the NFM estimates help us to complete the picture by showing what is driving these projections. So with that out of the way, that little explanation just to keep everything in context here, I want to move back to Netflix's report, which was, of course, just released yesterday afternoon after the closing bell. Netflix posted adjusted earnings of 64 cents per share, just beating the Zach's consensus estimate of 63 cents per share, getting back to their positive beats ways. The previous two reports were a miss and a match after a several year-long streak of beating estimates. Meanwhile, revenue figures came in at about $3.7 billion, topping our consensus estimate of $3.69 billion. Those revenues were up 40.4% from the year ago period, and Q1 earnings surged from 40 cents per share. So significant growth on the top and bottom line for Netflix. But of course, investors more concerned with, or at least definitely equally concerned with, if not more concerned with, Netflix's subscriber growth figures. So before we jump into the actual results, I just want to say that Netflix broke records in Q4, the previous quarter. It really added to the anticipation for this release from Monday. As a reminder, in the Q4 earnings release, management had said that it expected 4.9 million international subscribers and 1.45 million domestic subscribers in this current quarter, in the Q1 that was just reported. So that's the company's own forecast. Again, that's 4.9 million international ads and 1.45 million domestic ads. Turning to our NFM files, analysts seem to be just a little bit more optimistic than Netflix's own projections. Our consensus estimates were calling for the company to report 4.96 million international ads and 1.47 million domestic ads. So just edging out the company's own forecast by a bit. And then according to the just released report, Netflix actually saw international net ads of 5.46 million and domestic net ads of 1.96 million, beating both its own forecasts and our NFM estimates in each category. So adding those together, that's net subscriber additions of 7.42 million in the quarter. The streaming platform now has about 125 million total streaming members worldwide. That's obviously incredible growth. The streaming, the net ads were up 50% year over year. And then looking forward, kind of expected to continue with these, well over 5 million net ad quarters. Netflix saying that it expects to add 6.2 million new members in the upcoming quarter. And the company is also targeting a full year operating margin between 10% and 11%. So not only are you seeing remarkable subscriber growth, but you're seeing a margin expansion that is helping Netflix become more profitable. So from an investor's perspective, you're looking at maintaining that remarkable earnings growth while also having a little bit more money to spend on the original programming and content production that we know they're pumping a ton of money into. So that's Netflix, and we lump the FANG stocks together. When we talk about subscriber growth, Netflix, that's a very unique to Netflix type of metric. So it seems weird to transition from talking about the Netflix subscriber growth into the rest of the FANGs, where they're going to have specific line items that are obviously dramatically different. But now that we have one FANG stock in Netflix a little bit early in the tech earnings season, obviously, we're going to be looking ahead now to the rest of the FANG group. As a reminder, it's Facebook, Amazon, Netflix, and then Google, aka Alphabet Inc. And then the way I'm just going to run through these is taking a look at one key NFM estimate for each company, and then a quick glance at overall earnings and revenue growth projections, and then a brief check-in on valuation as it stands today. So I'm going to start here with Facebook, the F in the FANG. The NFM I want to highlight is daily active users. According to our file, daily active users are expected to be at 1.45 billion this quarter, and that's up from 1.28 billion at the end of the quarter last year. So that's a growth of 13.3%, pretty much on the same pace as the previous quarter. Facebook previously reported 1.4 billion daily active users, and that was up about 13.8% year over year. So that growth rate, essentially the same there. Facebook is currently trading at about 21.5 times forward 12-month earnings. That is a little bit higher than its low over the previous year. It has traded as low as 19.9 times earnings, but a definite discount to its average. Its median forward PE over the past year is 27.8. And of course, we know Facebook has experienced some volatility over the past few weeks as the Cambridge Analytica story has played out. So if you're still a believer in the company's current quarter prospects, if you think perhaps the report will help the stock bounce back, maybe you're looking at this 21.5 forward PE as a bit of a discount heading into its report. Taking a step back at looking at estimates again, current projections calling for earnings growth of 10.6% and revenue growth of 43% for the soon-to-be reported quarter. But worth noting that EPS estimates have been trending down over the past few weeks. And we might have that scandal to blame for that trend. Moving on to Amazon, the A in the FANG group. Of course, want to highlight Amazon Web Services revenues. According to our NFM estimate file, AWS revenues expected to come in at 5.24 billion. That would be up from 3.66 billion in the year ago period. That is growth of 43.2%. Still seeing some remarkable growth from AWS. Pretty much on track with the growth rate the company posted in the previous quarter. Revenues in the segment were 5.11 billion in the previous quarter, and that was up 44.4% year over year. Amazon, not quite as cheap as Facebook, trading at 136 times forward 12-month earnings. Obviously, a slightly stretched valuation there, but still acting like more of a growth play than some of these other FANGs. Its low over the past year has been 104 times forward 12-month earnings, and its median forward PE has been 146. So trading below the median heading into its report. Earnings expected to slump about 20% year over year for the soon-to-be reported quarter, but revenues expected to be up 40%. So pick your poison with Amazon. It's obviously polarizing stock with polarizing estimates. If you're bullish, you're going to read into it a different way than if you're bearish on this company. So I'm just going to leave it with those numbers, and you can kind of make your own conclusions on Amazon, because I know that people have definitely varying opinions on the e-commerce giants' valuation and growth prospects. I want to round things out here with Alphabet Inc., aka Google. The NFM that I love to look for, that I love to look at with Alphabet is Google licensing and other revenues. I believe that in the Alphabet earnings reports, they just call this Google other revenues. This is important to note. It's not other bets. Other bets is a very small category that involves like Nest revenues. The Google other bets is other things with the Google brand name on it that isn't just traditional search advertising revenue. So it's going to be like hardware, Play Store type of things. And what we've seen is this become a really one of the fastest growing segments that Alphabet has over the past year or so, especially with how much the company has kind of really expanded its hardware offerings. You think about the Pixel now, we have Pixel 2.0. Google Home, of course, has really exploded in popularity over the past year or so. It's kind of response to the Amazon Echo. So I love to look at this category, even though it is still relatively drop in the pond compared to the advertising side of things. Still, the other revenues expected to come in at $4.3 billion, according to our NFM consensus file. That would be up from $3.1 billion a year ago, and that is growth of 38.7%. Again, pretty much on track with the growth rate it posted last quarter. Revenues were $4.7 billion in the segment last quarter, and that was up 38.2% year over year. Google, that is, also has some interesting valuation metrics ahead of its report, trading at about 23.9 times forward earnings. Its low over the past year has been 23.4 times forward 12-month earnings, and its median forward PE is 25.7 over the past year. So a little bit of a discount right now to the median that it has been over the past year, probably owing to the a little bit of volatility we've seen in tech over the past few weeks. Current projections looking for earnings growth of 19% in the current quarter and revenue growth of 20%. And I will note, though, that earnings estimate has trended down a little bit over the past few weeks. Maybe some volatility there with the skepticism surrounding internet advertising companies and kind of data-driven companies. I don't know if that's necessarily the reason, but Alphabet has certainly been another company that gets lumped in with a Facebook when we start talking about data privacy concerns. So that's something to look for, something that I might expect the company to address in its earnings announcement or perhaps in the conference call. So a story that could play out there. Of course, we won't know whether any of these estimates will hit. Obviously, investors will be hoping that the respective companies can outperform in all these key categories, especially as the tech kind of looks to continue rebounding from volatility. Definitely all things to keep your eyes on in the coming weeks as these rest of the FANGs report. Netflix got it off to a solid start, so we'll hope for that trend to continue. That does it for us this week. As a reminder, if you feel that we missed something or if you want us to cover a different story, shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. We're also very excited to announce that we are now available on Spotify. If you prefer to use your Spotify app for podcast listening, just search Zacks Investment Research. You'll find the Zacks Stocks in the News feed, Tracy's Value Investor Show, and John Blank's Spoken Word Show. We're very excited to be on Spotify. Please follow us over there if you prefer that. As always, thank you for listening to the Zacks Tech Talk Tuesday. We will see you next time.